Good morning, good afternoon, good evening, wherever you're at, whatever time it is. Thank you for tapping in. Welcome back. We are the Crypto Casuals, and I am Stubby.
And I'm Kelly. Welcome back to the channel, Casuals.
And today we're just going to be doing another casual update. So let's get right into it.
And ladies and gentlemen, today we'll be starting off with a little video featuring Michael Saylor on the CNBC show, and we'll talk a little bit about it afterwards.
I want to talk about where you think Bitcoin is, but also want to talk about how you think about a MicroStrategy in your company as a proxy for Bitcoin now that ETFs are available to the public.
Sure. Well, I think I'd start just with Bitcoin. Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
And to say what he said a little bit in a different way. So you look at the pre-existing asset classes like gold or real estate or government bonds, or you look at the stock market, they value in the range all the way from 10 trillion all the way up to 300 trillion. You look at an asset like Bitcoin, which is only less than 2 trillion market cap today, and you compare the two, which one do you think is likely to double, triple, or quadruple in the next 5 to 10 years? Your $2 trillion or your less than $2 trillion market cap asset, or your 5 to 300 trillion dollar asset or assets?
And so to follow up on what Kelly was just saying, similar to what Michael Saylor was saying in the video, capital is going to be diverting from other asset classes into Bitcoin. And in some context, that is Bitcoin eating other asset classes. And so what you're looking at here is a graph of the longest daily inflow streak by ETF. And this is just a general record, not necessarily currently active. What you'll see is closer to the bottom of the screen, you'll see IBIT and FBTC. This would be BlackRock and Fidelity's ETFs for Bitcoin. They're Bitcoin spot ETFs in particular. And what you'll see is that they currently have a 59-day active daily inflow streak. And this is in comparison to the all-time records of all ETFs globally. So what you'll see at the top is the longest daily inflow streak, and that was by JEPI, which is another ETF, and that inflow streak was 160 days.
And if you look back down at IBIT and FBTC, it's already creeped into the top 20 all time for longest daily inflows. It's only less than 6 months away from creeping into number 1 and number 2 all time.
So that brings us to our next point, which is one of China's largest southern wealth funds, not sovereign wealth funds, but southern China. So it's one of their largest wealth funds, has filed for a spot Bitcoin ETF. And so China is bullish now on Bitcoin. And so what we're seeing as an increasingly common trend is that institutions and companies and countries are turning bullish on Bitcoin. Maybe not particularly like maximalist bullish, like they're not Bitcoin maxis to the extent of like Michael Saylor, but they're becoming more accepting of Bitcoin. Bitcoin as an asset is something that you pay or you get at the price that you deserve. You'll buy it when you deem that you're ready to buy it ultimately. And that'll be at whatever price it is when you come to that decision. So what you're seeing become an increasingly common trend is countries, companies, and governments becoming bullish on Bitcoin. And they may not particularly be like Bitcoin maxi level bullish or maximalist level bullish, like Michael Saylor, for example, but they are more accepting of it, uh, inclined to buying it, and even taking the steps to buy it, like with China's largest sovereign wealth fund, for example, here. And so, with Bitcoin as an asset, that is something that you should be paying attention to because there is only 21 million Bitcoin. And the 2024 Bitcoin halving is going to be, without a doubt, the most consequential halving for Bitcoin. It's going to take the most natural selling pressure out of the market, out of any halving that we've seen up to this point. And just to put that into a context, the block subsidy, which is the amount of Bitcoin that gets mined every 10 minutes, is going to be cutting from 6.25 Bitcoin to 3.125. And if you do the math at today's rate, what the cost is per Bitcoin and how many blocks there are per year, the amount of dollars that are getting reduced or removed from the sell side of the market is north of $32 billion. $32 billion of buying pressure no longer is going to be able to get it from natural sellers, which are the miners. They're going to have to go and find that from the hands of people who have, worked hard to get their Bitcoin, or, holders, long-term holders.
You double the sell pressure being taken out and buying pressure coming in. That really just means price go up. But the amount of buying pressure, the wind that is now behind Bitcoin, with not only the US institutionally accepting Bitcoin, it's starting to happen across the world with some of the bigger nations, the US, China, the UK. A lot of people are starting to follow suit. I think the number go up this year is going to be super, super number go up.
And again, you buy Bitcoin at the price that you deserve. The deeper that you look into it, the simplest way that you could define the technology is number go up technology, like Kelly said. But obviously, do your own due diligence. Thank you for tuning in. Like, comment, and subscribe. We'll see you next time. And none of this is financial advice. Peace.
Peace.